Money flows through the world like water in a vast system. It moves from savers to borrowers, fueling growth and turning idle resources into active value. Central banks act as the primary pump for this flow. By setting interest rates, they influence how fast money moves through the entire global economy today. When money circulates quickly, businesses expand and jobs are created. A high velocity of money is a clear signal of a healthy, growing, and active market. Conversely, when people hoard cash, the flow slows down. This creates stagnation and makes it much harder for new ideas to find the funding they require. Banks perform the essential task of intermediation. They take deposits from households and lend them to firms, bridging the gap between risk and reward. Global trade is a complex web of currency exchange. As goods ship across oceans, money flows back in payment, linking economies in a tight relationship. Technology has revolutionized how money travels. What once took days to settle now happens in milliseconds through digital networks and cloud systems. Investors are the catalysts of money flow. They hunt for the highest return on their capital, directing funds toward the most innovative projects globally. Public debt acts as a massive drain on the available money pool. When governments borrow heavily, they often compete with private firms for limited funds. Inflation is a tax on the flow of money. It erodes purchasing power over time, forcing people to invest rather than let their wealth sit in bank accounts. Real-world assets like land or buildings absorb capital for the long haul. Money flows into these assets to create stability and generate steady income. In a crisis, money often flees toward safety. Investors sell risky assets and rush into bonds or gold, which slows the flow into newer, riskier ventures. Corporate profits are a major source of recycled capital. Companies reinvest their earnings into new machines, research, and expanding their talent pools. Remittances are a vital lifeline for many developing nations. Millions of workers send money home, providing a flow that supports local families and shops. The digital asset ecosystem is a new pipe for global value. It allows money to cross borders without the friction of traditional, slow banking systems. Stock markets provide a liquid path for money to enter firms. By buying shares, the public directly funds the future growth of the world's best companies. Private equity firms act as a supercharger for money flow. They take stagnant companies and inject capital to drive efficiency and unlock hidden value. Every purchase is a tiny movement in the grand system. When you spend your money, you are essentially casting a vote for the company you want to survive. Commodities markets channel money based on raw demand. The flow here tells us what the world needs right now, from energy and metal to food and water. Global supply chains are powered by credit. Banks provide the short-term cash flow that lets manufacturers buy materials long before they sell the goods. Wealth inequality can sometimes clog the pipes of the economy. When money stays at the top, it may not spark the innovation that helps everyone prosper. Taxation redirects money from private hands to the public sector. The government then decides where that capital flows to support infrastructure and goals. The internet has flattened the world for money. Anyone with a signal can now access global markets, meaning capital can reach talent in any remote area. Smart contracts are making the flow of money programmable. They ensure that funds move only when certain conditions are met, increasing trust in deals. Insurance companies are massive reservoirs of capital. They collect small premiums from many to pay for big losses, keeping the economic flow consistent. Venture capital flows to the edge of what is possible. These investors accept high risk to fund technologies that could change the future of humanity. Foreign direct investment links the fortunes of different nations. It builds factories and grids, creating deep ties that prevent conflict and war. The dollar remains the dominant pipe for global trade. Most international contracts are priced in dollars, making it the bedrock of current money flow. Emerging markets are seeking more capital to bridge their infrastructure gap. When money flows there, it creates the next generation of global consumers. Liquidity is the oil that keeps the machine running. Without the ability to trade assets for cash easily, the entire financial system would likely freeze. Human talent is often the final destination of money flow. Wages are how capital reaches individuals, who then spend it to keep the cycle continuing. Microfinance brings the flow of money to the smallest entrepreneurs. Even tiny loans can help a person build a business that changes their entire life. Economic cycles are the heartbeat of money movement. We see periods of fast expansion followed by quiet corrections as the system rebalances itself. AI agents are now monitoring money flows in real time. They spot anomalies and fraud faster than humans, keeping the digital pipes clean and efficient. The rise of ESG investing is shifting where capital flows. More money is moving toward firms that prove they can grow without harming the environment. Global payment rails are becoming more unified. This reduces the cost of moving value, allowing more money to stay in the hands of the producers. Real estate is a massive sponge for global capital. People view property as a safe place to park their wealth, which drives up prices in major cities. Financial education is the key to managing your own money flow. Once you learn how to save and invest, you take control of your financial trajectory. Money is the ultimate messenger of human value. It tells us what society deems important by where it chooses to direct its collective resources daily. The flow of money is the story of human progress. By understanding this movement, you gain the clarity to thrive in our complex, interconnected economy.